And hello, everybody. We have Virginia here today. Hello, Virginia. How are you?
Hello.
Let's get right to it because it's going to be the U.S. tax system and the myths that can lead to understandings and costly mistakes. So we are going to do 20 of the prevalent tax myths debunked to help you navigate the tax obligations more accurately. Number 1, filing taxes voluntarily. In reality, by the way, filing taxes is legally required for individuals who meet certain income thresholds, which means if you make a penny, you better freaking pay. That's just the way it is. So I don't know if there's voluntary tax. There's no voluntary tax. I'm not volunteering to tax or to pay tax, but, they call it voluntary tax probably to, I guess, get the guilt off of them. You think that's the case?
Yes, absolutely.
Do you pay taxes, Virginia?
Of course, everybody pays taxes.
Right, because the IRS is watching. So you figured you would say that you're paying the taxes. I thought you might say that. So the self-assessment nature of the tax system, not the choice to file or pay taxes. You don't have a choice.
Right.
You have to pay them. For all those people that do not pay them, eventually they'll catch up with you. Number 2, you can claim pets as dependents. Well, since now today with the Gen Zs and other people, nothing against the Gen Zs, by the way, you just are a different breed. No pun intended there with the breed. But you can claim pets as dependents. People are now saying that they are cats and dogs. I identify as a cat. There's a video on YouTube. It says they identify as a cat. So the cop actually called animal control. And so he could be taken to the shelter. And I thought that was hilarious. Come back from the cop. I was with you. You can't claim a dog or a cat, although God knows that they cost more than children half of the time. But the reality, dependents must be human. Claiming pets as dependents is not permitted and can be considered fraudulent. Number 3. Do you have any comments on that, by the way? Are you going to talk today? You're just going to sit there and
On cats and dogs?
Okay, number 3. Illegal income is not taxable. Now, that's a dumbass thing. Illegal income is not taxable. In reality, all income, legal or illegal, is taxable.
What do they consider illegal?
I don't know. I guess smuggling in coke, is that taxable? Well, I guess so. I don't know. The IRS requires reporting of income of all sources. So if you're a prostitute, I guess you have to be able to pay your taxes on that. If you are a coke dealer, you have to pay your taxes. Remember that, guys, okay? All the people that come into the store.
But how do you know how to charge?
It goes by a percentage of how much you make.
Oh, okay.
Percentage-wise, yes. So, yes, the very good question, Virginia, very good question. Students don't have to file taxes. That's number 4. That's a myth. The reality, students with income above a certain threshold are required to file taxes. Even if not required, filing can be beneficial to claim refunds. So, hey, listen, if you don't owe any taxes, just give me some money anyway.
Yes.
And we'll give it back to you at some point.
That's exactly how it works.
Really?
Mm.
I'm not sure I would want to do that.
Some people actually have children just for the tax break.
Right. That's how Vera came about, right?
Absolutely.
That's what I thought. Okay, good. Number 5, money made online is tax-free. Money made online is tax-free. That's the myth. The reality, income earned online, including side gigs or freelancing, is taxable and must be reported. So you get that, guys? You win 50 grand on some sort of online gambling. You have to pay the taxes on that. And you know what? It's true. I was talking to somebody today at the store, and they won money gambling on, what is that? Hard Rock Cafe. They have an app, and you can gamble online. And they won. And the Hard Rock Cafe sends them a form, and they have to pay the taxes on that.
Some casinos, they take the taxes out, and if you owe child support, they take that out, and then they give you the money.
How do you know that?
I don't know.
Right. Okay.
Somebody won, and they told me about it.
Right. Jason began. Okay. That's great. All right. Number 6. Home office deductions trigger audits. That is the myth. The reality is, claiming legitimate home office deductions does not automatically lead to an audit. Proper documentation is key. So, although you may not get audited, I would act as though you are going to be audited. Get all your ducks in a row. Always have all your ducks in a row. All your receipts, things like that. Because one day, all you have to do is hand it over. Not like a thing of the odd couple where the guy gives like 3 shoeboxes worth of receipts and the guy has to go through them. So keep your books correct.
And it's a very small percentage of the house, of the taxes for the house, that you can write off. So it's not as big as...
Nick, what are you saying?
Like, let's say you have 4-bedroom house and 1 bedroom is your office. You can't write off the whole amount of the house.
No, but you can write off the Wi-Fi. You can write off the Wi-Fi because you need that in order to run your computer, in order to run your business. You can write off the printer and the ink because you have to print out the stuff that you have on the laptop. You can write off your phone because you need to use your phone at the office. Correct?
Yes.
Okay, thank you. Number 7. File an extension means you can pay later. That's supposed to be a myth. I actually thought that was fact.
It is
But
a fact.
filing an extension means you can pay later. The reality of it is an extension grants more time to file, not to pay. Taxes owed are still due by the original deadline to avoid penalties. That's what it's right in front of me. I'm reading it.
Then how do you know how much to pay if you didn't file your tax?
That's why you have an accountant,
Interest.
not something in a box that tells you how to do your taxes.
With a Rolodex.
Yeah, Rolodex.
I liked Rolodex.
Yeah, you do, of course, but the Gen Zs and the millennials don't even know what a Rolodex is.
No clue. You could fit 300, if not 500 cards in one Rolodex.
Yes, I know, because you are from the library. Number 8, all income is taxable.
Yes.
And that's a myth.
How?
I'm going to tell you. Reality, certain income types such as gifts, inheritance, and some scholarships
They're all taxable, except
may
scholarship.
be non-taxable. It's important to understand which each income is taxable. For instance, if somebody passes away and they have a trust,
That's protected.
yeah, you don't have to pay tax on that.
But if you pass away and it's considered
If I pass away, I don't really give it.
Exactly.
But say, for instance, your parents pass away and they have a trust for you, you do not, and say the trust is a house. Mm-hmm. You sell the house, you don't have to pay taxes on the house. Did you know that?
And there's gift tax.
It just said it right on here. You know, I read it and you were like, how?
You said that there were some that you don't pay tax on.
Number 9. We'll never get this done. Number 9, you can't claim deductions with a standard deduction. Huh?
Yeah, what?
You can't claim deductions with the standard deduction. The reality is, some deductions like student loan interest and IRA contributions are available even if you take the standard deduction. Deal with it. Number 10. Oh, this is good. A tax refund is free money. I thought it was free money. I use it as free money anyway. Reality. A refund indicates overpayment of taxes. You paid too much.
Correct.
Adjusting withholding can keep more money throughout the year. But then you have to pay at the end of the year. It happens all the time. It's a gamble. So you're always better paying more taxes throughout the year.
Yes.
And get money back at the end of the year. It's almost like a savings account. That's the way I look at it.
That you don't get interest on.
Right. Number 11, high tax brackets mean less take-home pay. Reality is the U.S. uses a progressive tax system. Only the income within each bracket is taxed, and that the bracket rate, so earning more doesn't reduce the take-home pay. Do you understand that?
No, say it again.
The U.S. uses a progressive tax system. Only the income within each bracket is taxed at that bracket's rate. So earning more doesn't reduce take-home pay. That's the way it works. Number 12. Keep debt for tax deductions is beneficial. Reality. Paying interest to gain a deduction often results in a net loss. It's generally better to pay off debt.
Yes.
I agree. Now, if we can only do it, Donald Trump. I know you're working as hard as you can, but can you work a little harder, a little faster, please? God. And if you want to come on the podcast, we could talk about it. Number 13, tax cuts pay for themselves. Reality. Most tax cuts do not generate enough economic growth to offset the loss in revenue. Thank you. Great. So much for the big, beautiful bill. Number 14, the middle class pays higher tax rates than the rich.
Yes.
That's a myth. How? No, that's what you said last time. The middle class pays higher tax rates than the rich. Reality, the U.S. tax system is progressive. The higher earning pay larger percentage of their income in taxes. What I think you're thinking of, Virginia, is that they have like these write-off things that they do. So they can write off their underwear, they can write off their socks, I guess. I don't know. They have genius accountants.
They're dry cleaning.
I can write off dry cleaning too. Number 15, filing taxes is optional for low-income individuals. Well, that's a myth. Reality, even if not required, filing can be beneficial to claim refunds or credits. Listen, if you don't have it, you can't pay it.
Right.
Can't get, what do they say, that you can't get blood from a stone?
Right.
It's the way it is. Number 16, immigrants don't pay taxes. They say that's a myth. I say that's a reality. I believe that immigrants don't pay taxes, but the reality says immigrants, including undocumented ones, pay various taxes. Really? Really right now? Do you believe that?
No, I do not believe.
I do not believe that Joey, or Jose, that jumps in the back and does the landscaping, is paying taxes. I'm sorry, just don't believe that. Reality, immigrants, including undocumented ones, pay various taxes, including income tax, sales tax, and property tax. Yeah, I think it's so. Number 17, all businesses' expenses are deductible. This is a tricky one, guys, so I want you to listen to this. All business expenses are deductible. That is absolutely not true. Business expense, water, can't do that. Only ordinary, necessary expenses directly related to the business are deductible. Personal expenses are not. Okay? Personal expenses, my pound of spaghetti, that's not. I wonder if they got that tax back where you can actually take people out to dinner. and write that off now. They
Oh, they
got
don't
rid of
have it?
Well, they got rid of it for a while. I don't know if they brought it back. Number 18, cash income doesn't need to be reported. Well, I will tell you that I know people that have a cash income and they just don't report it. So,
Didn't they have lots of movies about that in the 70s?
I don't know. I was outside playing in the 70s. I don't even think you were alive.
In the 80s, okay.
Okay, cash income doesn't need to be reported. In reality, all income, including cash and Bitcoin, I threw that in there, just kidding, must be reported to the IRS. Failure to do so can lead to penalties.
What is Bitcoin?
I'm not going there with that. I don't know even enough about it to even tell you what Bitcoin is. Number 19, ordering a tax transcript will provide a refund date. In reality, ordering a transcript does not expedite or provide information about refund timing. Use the IRS Where's My Refund tool for updates. You can actually go on the IRS and say, where's my refund?
What's a tax
And they're going to say,
transcript? Never heard of a tax transcript.
I guess they want to know if you can get a text. It's telling you you can't get one, so there is no such thing as one. Okay? Go on to Where's My Refund? They'll say, you're not getting one. Number 20, getting a refund means no need to adjust withholdings. What's your answer to that?
Withholdings, isn't that? No, those are dependents. No, I don't know.
The more you withhold, the more you get back.
Yes.
That's just the bottom line.
Oh,
Yeah, anything you want to add to this, by the way?
the realignment tax.
What is that?
Well, the company Yum, it's a corporation.
Yum?
Yeah, Yum.
Is that like a yum yum tree on US 1 or whatever?
The IRS charged them $4 million, and Yum went and sued the IRS for $4 million.
What is Yum?
It's a corporation that owns businesses that serve food.
Yum.
And they restructured. So they consider that a realignment tax and says that Yum did not pay enough money. $4 million.
Well, that sucks for them.
Let's see what happens.
We're going to do a realignment tax here. We're going to realign things in the store, so Virginia can only come in once in a while. But do you have anything last that you want to add before I edit this and put it onto the air?
How many dependents can you have?
I don't really know that answer, but I do believe it's like sort of endless. I know people that have had like 5 babies and they get like, $1,000 a kid. It's like a business.
Yeah,
And it's
like trust funds.
really weird that they can do that.
Did you ever hear of trust fund baby?
Yeah, but that's not necessarily meaning that's what it is, okay? This is why we have Virginia on. It's for those people to look like at the podcast and go,
No,
who is that?
some
That's
corporate.
not what a trust fund baby is. That's not a trust fund baby.
Yes, they named the baby after the trust fund because they come up with the name before the baby is born, and that's who they're. That's who.
It's Johnny Trust Fund. That's what they named him. That's
Yes.
Vera Trust Fund. All right. Say goodbye. Have a great day, everybody. Talk to you tomorrow.